Okay, so hi. Today I'm gonna read Groupon's 10K. So I went to their website, Groupon.com, and then I have this monitor over here. Let me switch this up here. Let's max that. And now we're going to go down. There should be investor relations somewhere. Oh, there it is. Okay. So, okay. Groupon is a leading local marketplace. 1 million plus merchants worked with to date. Founded in 2008. More than 75% of transactions are on mobile. Mobile first. Leader in the fragmented $1 trillion local market. Such a BS statement, but okay. Over 1.5 billion Groupons sold globally. I guess that's since inception. Beloved global brand, okay. Headquartered in Chicago, more than $25 billion pumped into local businesses more than $35 billion saved by consumers in North America. Okay, so let's do the 10Q. I don't want the quarters. I want the you know what? Let's just go to SEC because they're gonna like fuck around with me, and I don't want that. So let's go to sec.gov and search SEC, and we'll do Groupon. Here we go. And 10K, March 16th, 2023. All right. So Groupon. Let's see. So in case you don't know what a 10K is, this is the printed out version. It's substantial. There's like 130 pages, 121 pages. So this is what the front looks like. So you see there, I don't know if it's like backwards for you, but it's Green Lane Holdings. Where does it say? Right here. Green Lane Holdings. It is a wait, let me charge it. Let's focus on. It is a like a vape company. So from what I understood, because I didn't go into the 10K that much because there was like so many problems with it. I just saw like the first 10 pages. I didn't even bother. So maybe not 10 pages, but I went to their balance sheet. Just like it was not good. They kept diluting shares, which is like not cool. And I used this handy dandy book, The Interpretation of Financial Statements. It's only like, let me see, 103 pages, 100 something pages. And it is very good because, let me see if there's a table of contents. Yes, there is. So if you look at it, it shows you every item. So part 1 is balance sheet and income statements. And part 2, analyzing a balance sheet and income, account by the ratio method. And part 3 is definition of financial terms and phrases. So when you're going through a balance sheet and you kind of want to know what Ben Graham would do, then you just go to, like, say, Goodwill or debits and credits, capital and surplus, property account, depreciation and depletion, non-current investments, tangible assets, prepaid expenses, deferred charges, current assets, current liabilities, working capital and current ratio. I think the most important things would be earning power. And if you read this book, the most important thing is earning power. No, it's a durable competitive advantage, and then with that comes strong earning power and a strong history of earning power. So liquidating value, I guess you could do that if something's really close to bankruptcy or has a really low market cap. Then liquidating value and that current asset value would be important. So in the case of Green Lane, that would be really important because their market cap is like 1 or 2 million. Earning power. So normally I would pay attention to current assets through calculating book value. So page 28 through 50 are really the only pages that matter. And those are current liabilities, working capital, current ratio, inventories, receivables, cash, notes payable, reserves, book value, or equity, and calculating book value. Okay, so for which we're not going to do that, first let's look at the business. So, well, forward-looking statement, do we really care? Okay, no, I'm not going to read that. Okay. Item 1, the business. Groupon is a global scaled two-sided marketplace that connects consumers to merchants. Consumers access our marketplace through our mobile applications and our websites, which are primarily localized Groupon.com sites in 13 countries. We operate in 2 segments, North America and International, and in 3 categories, local, goods, and travel. See item 1, note 8, segment information for additional information. Our strategy, categories, marketing, don't really care about that. Human capital management, don't really care. I want to go to, because I have read this before, and I got to page, I think 13, and I stopped reading because there were so many issues. So, this is page 7, so this is page 8. So, here's where we start to see problems. So, let's start at page 8. Our goal is to nurture... Oh, that's not important. Okay, technology. In early 2023, we completed the migration of our public-facing websites, internal applications and services, as well as our back-end business intelligence systems for being hosted at our data centers to a multi-cloud infrastructure. We employ security practices and modern tools to try to recognize intrusions to our technology infrastructure. We engage independent third-party internet security firms to regularly test the security of our websites and identify vulnerabilities. In financial transactions with customers conducted on our websites and mobile applications, we use data encryption protocols to secure information while in transit. See risk factors for additional information regarding to potential cyber threats. Competition. We compete with other marketplaces, and some of our competitors have no longer operating histories, significantly greater financial, technical, marketing, and other resources. Oh, sorry, I read that wrong. Have longer operating histories, significantly greater financial, technical, marketing, and other resources. In addition, we compete with companies who address only specific verticals in the local experience market, and in our goods and travel categories, companies who have greater scale and larger customer bases than we do. These factors may allow our competitors to benefit from their existing customer base with lower acquisition costs. So that would be CAC, which is customer acquisition cost, or to respond more quickly than we can to new or emerging technologies and changes in customer trends. These competitors may engage in more extensive research and development efforts, undertake more far-reaching marketing campaigns, and adopt more aggressive pricing policies, which may allow them to build a larger subscriber base or to monetize that subscriber base more effectively than we do. So they know that they're not good, and they are. Why are they like? It's so weird that. I mean, the purpose of a 10K is to provide transparency, regulation. I mean, this is really just boring stuff. Intellectual property. Okay. So page 10. So here we go. Page 11. Page 11, 12, and 13. 13 is where I stopped. Actually, 14 is where I stopped. It was either 13 or 14. I think 13. And it continued up to 14, and then I stopped, yeah. So, let's go to page, where's risk, summary risk factors. Okay, item 1A, risk factors. 10 minutes already, oh my god, okay. Our businesses, not important, okay. The following is a summary of some of the risks and uncertainties that could materially adversely affect our business prospects, financial condition, operating results, and the trading price of our common stock. You should read the summary together with a more detailed description of each risk factor contained below. Risk related to our business, operations, and strategy. Here we go. That was empty. Time for a new one. All right. Our strategy may be unsuccessful and may expose us to additional risks. If our strategy does not achieve its expected results, its expected benefits, there could be negative impacts to our business, financial condition, and results of operations. Our restructuring plan could be disruptive to our operations and adversely affect our results of operations and financial condition, and we may not realize some or all of the anticipated benefits of this plan in the time frame anticipated or at all. I'm scratching, sorry. I have eczema, I'm having a flare up. Our operating results may vary significantly from quarter to quarter, which means there's going to be a lot of volatility in the stock. Our international operations are subject to varied and evolving socio-political conditions, as well as commercial, employment, and regulatory challenges, and our inability to adapt to the diverse and changing landscapes of international markets may adversely affect our business. Our future success depends on our ability to attract and retain high-quality merchants and third-party business partners. If we fail to retain our existing customers or acquire new customers, our operating results and businesses will be harmed. Well, no shit. We operate in a highly competitive industry with relatively low barriers to entry, which means anyone can come in, and must compete successfully in order to grow our business. That is every business, but okay? Our success is dependent upon our ability to provide a superior mobile experience for our customers, and our customers' continued ability to access our offerings through mobile devices. An increase in our refund rates or estimated liabilities with respect to unredeemed vouchers could adversely affect our financial results. Not really important. I assume that would be a small amount of their operations. Okay. The loss of key executives, members of our management team, and employees across our organization, or a failure to attract and retain other highly qualified personnel in the future could harm our business. Failure to deal or subject to payments related risks. We have identified a material weakness in our internal control of financial reporting, which could, if not remediated, or if we identify a additional market weakness or other advanced findings in the future, impair our ability to report accurate and timely financial information, adversely affecting investor confidence, and have a material and adverse effect on our financial condition and results of operations. Risk related to technology and cybersecurity, not important. Risk related to transactions and investments, not important. Risk related to our brand and intellectual property, not important. Legal, regulatory, not important. Okay, this right here, page 13. This is the make or break moment where they break. Risks related to our capital structure. Our access to capital and ability to successfully manage and raise capital in the future may be limited, which could prevent us from growing. Adversely impact our liquidity, and our existing credit agreement could restrict our business activities. Now, if you don't know about business, if you don't have cash, you're done. So if they don't have cash, then you do a Chapter 10, and that's it. Our financial statements contain a statement regarding a substantial doubt about the company's ability to continue as a growing concern. If you have to write a statement about your company's ability to not go bankrupt, that is not good. Okay, watch. This was the line. This was the point. We may not have the ability to raise the funds necessary to settle conversions of the 2026 notes in cash to repurchase the 2026 notes upon a fundamental change, or to repay the 2026 notes in cash at their maturity, if not earlier converted, redeemed, or repurchased. And our current and future debt may contain limitations on our ability to pay cash upon conversion of the 2026 notes or at their maturity, or to repurchase the 2026 notes. The terms of the 2026 notes could delay or prevent an attempt to take over our company. The conditional conversion feature of the 2026 notes, if triggered, may adversely affect our financial condition and operating results. Okay. If you cannot pay debt, which is what a note is, there's a problem. Now, why was I drawn to Groupon? Well, once upon a time, when I was 13, I decided that I was going to buy Groupon stock. Now, the stock has split since then, so it doesn't really matter. The price I want to tell you, this was 2020. Yeah, I was 2016. Here we go. Yeah, I was 12 or 13. Yeah, I had just turned 13, and I bought the stock at $3.43, and I bought 30 shares at $3.43. 30. The stock went down to $2.94. So from $3.43 to $2.94, $2.97 or something like that, I bought 60 more shares. The stock immediately jumped to 4 something. 30-40% return in a matter of, let's see, this is February, this is March. In 1 month, the stock went up. It doubled in 1 month, but I sold at about the 40% upside. So yeah. So what attracted me was a low market cap to look into it. And yeah, $400 million market cap. Now I'm reading this, so I'm like, well, let me look at their 10K. So I'm reading it, and there's so many problems. We're not going to be able to pay our debt. We don't have cash. We can't raise debt. We can't get any credit, and the stock is up 280% in the past 6 months. Since May 16th, the stock is up 350%. Today is the 28th of September. So May, June, July, August, in 4 months, the stock is up 350%. How does this make sense? It doesn't. It doesn't make sense. So I was like, what? So then I stopped reading because that alone is like crazy. They do a chapter 10 like tomorrow, and the stock is up 350%. So you know what? Let's go to the balance sheet here. Should be financial statements. Item 8, yeah. So let's do consolidated balance sheets. Whoa. Wait, let's open up an Excel down here. Okay, so I'm opening a spreadsheet, and we are going to do, well, let's do the current ratio, which is current assets over current liabilities. Current assets are it's not gonna tell me, so I have to manually do it, which is like, no. Oh, okay, here it is. Total. I forgot how to read a balance sheet. I haven't done it in so long. Okay. 300. Okay, you know what? Let's do 2021 first. 2021, and then let's do 2022. And then let's do another cell that's current ratio. So in 2021, current assets was, total current assets was 588,051, 588,051. And in 2022, it is 351. Current liabilities, let's do current liabilities. Right here. So 239. Oh wait, I'm doing it backwards. Uh-oh, that's not good. Doing it backwards. Okay, 2021 matches up with 588. Yeah, I'm just doing it backwards. Okay. And then 2022 is 367. Okay, so now let's do 2022. Total current liabilities in 2022 is 531,440. Oh, that's not good. That is bad. And in 2022, that was 2022. Yeah, 2022. Sorry. I'm like totally messing this up. Okay. Now in 2021, guys, this current ratio is terrible. I haven't even done it yet, and I already know. 2021, it was right here. 639.87. Okay, so current ratio equals current assets divided by current liabilities. Current assets divided by current liabilities. Okay, so the current ratio from 2021 was 0.93 and 22 was 0.69. No. Not this. This doesn't make sense. This doesn't make sense. And if it doesn't make sense, it doesn't make dollars. Wow. Okay. Let's do revenue. In 2021 was 794. Remember, this is coming out of COVID, I guess, when it should be wrapping up. This is so 2021, yeah, and then 2022 is 599. Oh, man. That's not right. Your revenue went down. Christ. It went down 25%. 25% from 2021 and 22. From 21 to 22, it went down 25%. Wait, that. Oh, I'm so stupid. I haven't listened so long. That was service. So now let's like, well, it's actually unchanged for that. Oh, this is even worse than total revenue 967 comma 108, which would be that divided by that. A 40% loss down. Negative 40% revenue growth. I'm just typing. Why isn't it letting me? Oh my god. Negative 40% revenue. Excel is not wanting to work with me here. I don't want a function. Oh my god. Crikey. Okay, you know what? Let's just abandon that. Okay, because this is not working. Okay. Gross profit. I really don't care. Income from continuing operations. So they had a loss. Okay, 2020 was COVID. They lost 286. 2021 they made 120, and then 2022 they lost 234. Oh. Stockholders' equity, we don't really care about that. And statement of cash flows, net income loss, they're all losses, loss, what I just repeated. Loss in 2020, made in 2021. It's the only year they were profitable. In 2022, they lost. Depreciation and amortization of property, equipment, and software. It's nothing. What's your biggest line item? What's this? Deferred income taxes? That's 49. Here's 71. What did they lose? Accrued expenses and other current liabilities, 71. Net cash provided by operating activities from continuing operations, loss of 135. Investing activities, 36. Come on, guys. Financing activities. Proceeds from borrowing under revolving credit limit agreement, 40,000. Issuance cost for 2026 convertible notes and revolving credit agreement, 490. Sorry, the other ones are in thousands. This is just 490. Which the thousands are in thousands, so it's million. This is consolidated statement of cash flows in thousands. Cash paid for interest, 5,940. Income tax payments, 5,184. Increase in liabilities related to PPE and capitalized software, 3,325. This is a terrible company. Look, here's what I think happened. I think that, so they got a new CEO they got a new CEO in March 2023. Yes. Groupon has appointed Dusan Senkipil as interim CEO to lead the company's transformation strategy. American Groupon has a new CEO. The board of directors has appointed Dusan Senkipil as interim CEO. TechCrunch, let's see. Yeah, Groupon stock pops company. What was it? Groupon stock pops, this company switches up its CEO. So that's what happened. They got this new CEO, and now the stock is like skyrocketing because they think that this guy is going to turn it all around. Groupon, which has lost 99.4% of its value since its IPO, names a new CEO based in Czech Republic. A dozen years ago, Groupon shot to fame popularizing the online group buying format, confidently rejecting a $6 billion acquisition offer from Google and instead going public with a $17.8 billion market cap. The company today says it has 14 million active users, but almost consistently for the last decade, its financial position has been in a slow decline. With stagnation in its core business model, little success in efforts to diversify, declining revenues, and ongoing losses. And today comes the latest chapter in that story. The Chicago-based company, which today has a market cap of just 103 million. Remember I said right now it's at 44, let me see. What count is hype? Yeah, 417 million. So at the time in March, 103 million. Has appointed Dusan Senkipil, a current board member, as interim CEO. Senkipil will run the company out of the Czech Republic. His appointment is effective immediately, the company said in a statement today. He replaces this guy, who was the Groupon CEO for just 50 months. He was an executive at Zappos for more than a decade after he took the Groupon job. He continued to be based out of Las Vegas. He will stay on for 60 more days to help with the transition. None of this is really important. The company has also been doing some other fairly intense restructuring with its position not helped by the wider pressure on the technology sector and the economy overall. Across two tranches in August 2022 and January 2023, it laid off around 1,000 employees, roughly 30% of its workforce. They only have 3,300 people working for them? That's crazy. Groupon specifically has faced a host of challenges. The very concept of group buying is structured on the concept of hype, which may have been a fateful, less than promising starting point. Even early on, and despite the predictions of it being a threat to Google and Amazon, others debated whether it could rightly be considered a tech company. But beyond this, Groupon, despite making more than 40 acquisitions, including a host of clones across international markets, just sue them for IP infringement. Why do you have to acquire them? Plus, a number of interesting e-commerce and fintech businesses fail to find other hooks to diversify itself. 14 million active local customers and millions of visitor sessions per month. Groupon has valuable assets capable of fueling significant growth paired with operational excellence. I am excited to build on that foundation to further. Oh, this is a quote. I am excited to build on that foundation to further scale the company's marketplace and drive increased value for all stakeholders. I have built multiple businesses from the ground up that operate at scale with hundreds of millions of users, and I believe I know what we need to do at Groupon to take the company to the next level. For some context on those numbers, 14 million might sound like a big number, but recall that when the company first filed to go public back in 2011, it had more than 83 million registered subscribers, with around 15.8 million of them having purchased Groupon deals. There is a lot of work to do, in other words, to get people to care about Groupon again. Who was this quote? Yeah, this quote was by Senkipil, the new CEO. Wow. So I have no idea what's going to happen. I bought the options for the stock. I'm making a bunch of money, but like, I don't know. I was going to short it, but I'm like, what much? You know, this is kind of like a GameStop kind of thing, you know. Well, not, I shouldn't compare that, but like, it's just hype. May 16th, it was trading at 297. and it's a 349.663%. It's up to 1336, 1340 after hours. Okay, this video has gone on long enough. I'm sorry about that. Hope I didn't bore you. Okay, bye.